Welcome to the second episode of Real Talk podcast by MG Realty. And today I'm with two great professionals, Brett Nixon with Rainbolt, property tax consultant. We're going to talk about controlling the cost of homeownership because I know it is on everybody's mind, whether they're looking at buying a house or whether they own a house, and they keep seeing that cost of homeownership going up.
I'm Brett Nixon. I'm with Rainbolt Company. I'm a property tax consultant. Rainbolt's been around for over a decade. So we represent property owners and help them save money on their property taxes through appealing.
And then Joy Knox, my go-to with State Farm. She's been doing insurance for a very long time. It's so knowledgeable. If I had any questions about insurance, I call Joy and she always has an answer.
I'm Joy Knox. I'm an agent for State Farm Insurance. I've been in Houston for 41 years. And we love serving this area and the entire state of Texas, as a matter of fact. But we do homeowners, we do auto insurance, life insurance, flood insurance, anything that's of interest to you. We certainly take care of it. And we certainly love our policyholders. And we're right there in the energy corridor across the street from Sherry.
I'm excited to talk to these two guys about how we can help our followers control the cost of homeownership. And I do have some questions on ChatGPT, but I usually just come out, with what I'm thinking. And I think what's been on everybody's mind as we've seen this market slow is that we know interest rates have been a huge factor in what is making the cost of homeownership less affordable. We keep hearing that affordability factor, right? But behind the scenes, we've also seen as prices rose, guess what else rose?
Yeah.
Property taxes, right? And that's something, property taxes are almost a half of our payment, or it used to be. Now with interest rates higher, that's a little bit less than your principal and interest, and then insurance. So when you're looking at your insurance going up every year, and we're trying to get buyers out there, and first-time home buyers are finding a little bit more daunting. So, what I want for both of you to share, and I'm going to start off with, one side, beyond principal and interest, what do you think are some of the silent budget killers of homeownership?
Joy, go ahead.
Yeah. Well, insurance. Insurance has definitely escalated in the past few years based on profit and loss and how much insurance companies have paid out in losses. In our market area, we have catastrophic losses. We have intense rain, we have intense hail, we have intense heat, and we have intense flooding as Harvey. So we've had catastrophic losses in the past few years. So insurance companies have to weigh profit and loss, and as a result, they've got to go back and recapture that money so they can put it back in their pool and pay out more. One of the most expensive premium-driven entities in our market area in Houston and Katy and the surrounding counties is the roof, the age of the home, and the age of the utilities. So when you're looking at utilities, you're looking at plumbing, you're looking at your HVAC, and you're looking at the electrical system of the home. Of course, a newer home is going to have lower premiums, up to 40 to 50% on. Older homes that have not been cared for, a 20-year roof, could be considered an eligibility risk.
Okay. And we're running across that when we're selling homes when the roof is over 15 years old.
Yes.
Because it used to be that we could say, well, they might not want to insure the roof. They're going to want you to replace the roof at some point. But now a lot of insurance companies aren't insuring the house unless there's an agreement to replace that roof pretty soon. So that's becoming kind of a factor when we're trying to sell homes as well. But on your side, Brett, you're dealing with property taxes, and it is we don't pay income tax in Texas.
Yeah.
So Texas gets the revenue from property taxes. So it has to be a bigger amount. I have seen the rates go down, the percentage. Like I know when I moved to the energy corridor, it was closer to 3%.
Yeah.
Now we're kind of lingering around 2%. So that's a good factor.
Yeah, for sure.
But yeah, how do you see that really affecting affordability as well?
Yeah, that's a great question. So as you mentioned, as home prices continue to rise, so as property taxes. And so we have a unique system in Texas where it's localized. So the state doesn't control property taxes. Our local districts control them. Mm-hmm. And so it's really just based on, they're trying to predict what's the value of your house, what would it sell for? And so, you've got appraisers of the district, who I'd say aren't as knowledgeable as the realtors, knowing the real market values, because they're using an algorithm. They're having to, like in Harris County, they're having to appraise 1.6 million homes. So they use a computer system to try to guess what would your house sell for. And that's what you pay taxes on. And so what we've seen the last, 5 years as prices have increased, there's two things that you can really do to control your property taxes. It's one, make sure you have the homestead exemption. So if you're a new home buyer and you're buying a house, you've got to apply for the homestead exemption. We could talk about the legislation later in the show if you want to, about what the state's trying to do to help people with their primary residence to save more money. But the second thing is appeal that value. So as we mentioned, it's a subjective value that the district is saying this is what your house would sell for. And Texas gives you the opportunity to challenge that value every single year.
Yes.
So my advice would be, whether you want to hire a company or do it yourself, over the next 30 years you own your own, you could save 15 to 20,000 just by appealing it every single year.
Yeah. I advise all of my clients protest it every year. So it doesn't hurt. I mean, if they say no, they say no, right? So I think the only time where I've seen where it's not beneficial to protest is if you just bought the house and you paid less than what the county has your value at. So that would be the only time.
But even then, so it's it's a funny and unique system. Is they changed the rule; they can't raise the value. So
yeah.
Even if you bought it for you bought it for more than they have it appraised, but you're still trying to get it lowered, you can still go argue what's called equity and say, well, my neighbor's houses are still appraised, and their value's this, and you could still get your value lower.
Yeah.
So they can't raise your value. So
that's the rule, is that your property should be fair and property value should be fair and equitable with your neighbor's value.
Yeah, there's two things that the district would say. They're going to look at the equity. Is it fair with how your house has been appraised compared to your neighbors? And then the second aspect is the sales.
Yeah, but let's talk about that. What does that mean? Because I think for some homeowners, it might just be a little intimidating. What do you mean I got to go protest it? Do I have to go on a hearing? And, there are options. That's what you do. You can pay someone to do it. And I think the way I've said is, if you don't have the time to do it, then hire someone to do it, because, you can say what your fees are, but I believe you don't charge unless you actually lower the value.
Yeah, that's exactly.
So it's no cost to a homeowner. So why would you not do that if you're really trying to control that cost? But the other thing is that if it's homesteaded, right, the county can increase it no more than 10% every year.
Yeah.
And if you think of it, you take that and you say, if your home value increased 10% every year, which we know our values really don't increase 10% annually in Houston, then you would suddenly your tax appraised values would suddenly be way higher than what your home is actually worth.
Yeah, for sure. And that's the most probably confusing. The cap, the 10% cap, is where we had the most questions, because let's say 5 years ago, when the prices really went up, you saw home values skyrocket in some of our counties 25%. Well, then the house has to be capped at 10%. So you can think of it like, you're only paying 80% of the value of your home that year. And then the next year you might be paying 85%, then 90. And it's going to keep rising until it finally catches up. But it's frustrating as a homeowner to say, I'm not getting a 10% raise, but you're raising my taxes 10% every year. And that's the really hard part.
Yeah. Yeah. So another point, which has always kind of thrown me off, is that values are appraised in January. So like values for 2026, they're putting that appraisal out January 2026, and we don't know where that market's going yet. Yeah. So it's always backwards. Yeah. It's always backwards. We're like a year behind of what my actual value is. And I have clients, like, they'll call me and say, hey, can you send me the comps? I'm like, I can, but I'm sending you comps for 2025.
Yeah, exactly.
Yeah. So higher than going, and it's that lag behind. So you might go into 2026 and may hit with this higher appraisal, but today your house is actually worth less. You need pointers for you?
Yeah, for sure.
Nice.
I think, pulling the comps is probably the best way to get a reduction, and understanding, when an appraiser looks at your house, they're going to look in your specific neighborhood and the sales that happened over the last 12 months.
Yeah.
And, certain counties will add time adjustments on there as well too. And so knowing how to argue and get around time adjustments and get out of that is one big thing. I think also submitting photos and bids, that's another thing that homeowners can do. If there's things that need to be fixed in your house, that the district doesn't go inside your house, they don't know what's going on, or finding remodels that they missed. A lot of these homes that are selling in your neighborhood have been remodeled. And so just looking at the sales, pulling them up on HAR and making sure are these homes comparable to one that the district's using.
Which is probably where property tax consultant or your realtor can help you, because the average homeowner, like Joy, you own a house too, right? Do you know which of your neighbors have remodeled their homes? No. But I have a funny story that I went and actually I wanted to learn what it was like to go through the protest process. So I said, I'm going to do it myself one year just because I want to see. And they, I don't know what you call them. The appraiser there said, well, we have your house listed as, better than most of the other homes. And I said, how do you know what the inside of my house looks like? And they said, we don't, but we know the outside. Yeah. So that's the key. So, I mean, does that mean that we got to keep our houses looking terrible on the outside to keep or update the inside, but don't update the outside? You put in that new pool or you add a new pergola, the outdoor kitchen, appraisal district's going to see it. So how are you going to hide that?
Yeah, that's a great point. And I think you mentioned working with an appraiser. I think that's the unique thing about appealing your taxes is it's subjective. It's somebody's opinion. And so you could meet with 10 different appraisers from Harris County and get 10 different opinions of value for your house. Yeah. So I think that's where hiring a company, a local company who understands the human dynamics. I know we were talking about AI before the show, and we use AI just like everybody else because I think it helps us eliminate some of the errors that humans might make when looking at data. But what AI can't do, and it's part of the same thing in your industry, is the AI can't read the person in the room. It doesn't have empathy for the person. It doesn't own a house. It doesn't know what it feels like to have your value rising. And so, you're going to hire somebody who's felt that pain, has worked with the district, knows how they work. And, some of their appraisers might take the median value of comps. Some might take the average. Yeah. So just having someone that knows how can we get the lowest possible value is probably in your best interest.
Yeah. So let me have you just kind of add that tip. Why is it beneficial for someone to hire you to take care of protesting their values versus trying to do it themselves?
Yeah, that's a great question. So, I think the biggest thing too is we often hear people say that I always have people call and say, I've always done it myself, but I missed the last 2 years. I forgot to file a protest. And right there, that could be $3,000 to $5,000 in savings that you just missed out because you missed the deadline. So one, you'll never miss the deadline. And then two, just navigating the complexity of working with different appraisers, going in front of an appraisal review board. And we got a unique strategy in Houston. And so, what we get to do is we get to try to dodge the bad appraisers. And so we try to know who are the appraisers we're working with. And when I say bad, I just mean they don't look at data the same way we look at them. And so we might like 3 comps that we think are really good and should lower the value. And we know some appraisers might not like those comps, or they stick to only what Harris County. And so we try to work with and navigate, all right, who are the appraisers that we can find and work with. And I think that's the advantage of a company is we kind of get to work with different appraisers where you might just get assigned one appraiser who will protest your taxes.
Yeah, that very good point. I just want to add to that from personal experiences that you sometimes only have one chance and it's missing that deadline. And that's where I think most homeowners do is they miss the deadline, which is usually, is it May 31st or after?
So they switch it. So it's May 15th or 30 days after you get the notice letter in the mail.
Which sometimes you don't get the notice until after May, which is sort of throws you off. But if you're busy and you're a working professional like Joy, myself, you, that you might miss that notice. Or if you show up late for your hearing, no second chances.
One of the other things that we see happen a lot too is, as you mentioned, you're working with an appraiser. Well, sometimes the homeowner doesn't know when the appraiser gives them an offer for their house. They think that's not what I wanted. I want better than that. And so they turn down the offer, then they go to the appraisal review board, and that offer is now off the table, and they end up with a higher value.
Yeah.
And so I think hiring a company is we've got 11 years of industry knowledge and know that's probably the best we're going to get. And so we help you make better decisions.
Yeah. Great. Well, thank you so much. We want to make sure that at the end we get your contact information out there so that before that May 15th deadline, people do go back and protest your taxes, because it is one of the most important factors in controlling your cost of home ownership. If you do not, you can see that. And I can tell when someone's getting ready to sell their house, and if I pull up their tax values and I go, whoa, way out of line here, either it's on the good side or it's on the bad side. So back to Joy, who is my favorite insurance person. Joy, I think you had good news for me, right? Interest rates are going down, and you just told me the other day ago that insurance rates are starting to come back down.
Absolutely. Well, in the past few years, based on catastrophic losses, we've seen all in the insurance industry, all companies escalate pricing, some a lot more than others. We have progressively gone up, and now the market is more stable. So that's a great thing. There's more accessibility to insurance companies and pricing. What you do want to look at when you are shopping and you're buying a home and you have so many different bids, each consumer needs to go to the Texas website. We have a Texas website that's called OPIC, which is the Office of Public Insurance Counsel. And you can look at the different insurance companies and the coverages that they provide, whether it's name peril, which is very limited, is actual cash value name peril, or is it all risk? Meaning we pay for everything except items that are excluded from the policy. So that being said, some of the things that consumers can do to keep their insurance premiums lower, say new home, easy peasy, bundling your auto insurance together with your home provides another 40% off. That's huge.
Whoever 40% off on your total insurance, or 40% off on the
that's significant. That is huge. Yeah, that is huge. Insurance companies have something called credit characteristics. So if you pay your bills, you pay your electric bill, you're very financially responsible in your personal life, that relates over to insurance. I'm going to be responsible with claims. I'm just not going to be, I'm going to protect my property. I'm going to drive safely. I'm going to do all these things. So the higher your credit score, the lower your insurance premiums are going to be. And people have to be mindful of that. A lot of times, sometimes people don't qualify, and it's not necessarily the location, it's the credit score or previous claims. That is huge.
Now, previous claims on auto, homeowner. So like if you own homes and you have, so that your history of claims follows you?
Not necessarily auto, that is exclusively follows the auto policy. But if you have filed 2 theft claims on the current home, and then on the previous home, you had a water claim, that's 3 claims within 5 years. That's not a good risk, right? They have to manage. Do not file nuisance claims or minor claims. Insurance policies are designed for catastrophic losses, hurricanes. Your pipe breaks in the house and it's flooded and you've got an $80,000 loss. That's what insurance companies are designed to pay. Not, I have a leak in my roof and you find an estimate and it's $256 for a contractor to come out. It's not a big deal. Don't file that claim. Once it's filed, it's on there permanently, even if 0 is paid out. And we all have large deductibles here in Texas and Houston, right? They're huge.
Yeah. Now,
Because we're a coastal area.
they're bigger. They're probably, I don't think you can buy a house today under 2%. When did that happen, right?
No.
When I first bought a house 20 some years ago in Houston, it was 1%.
Yes.
So huge factor, but that really helps with these roof claims, because now if you take 2% of a $500,000 house, they've got to pay $10,000 out of pocket.
Or more. We are seeing 3%. We are seeing insurance companies go to 5%. So that really means that the policyholder is going to self-insure. They're basically self-insuring. We're a coastal area. If you move further inland, you're going to see lower insurance rates because we're right here on the coast. So we are a risk factor here. But higher deductibles, lower premiums. I have some doctors, I have some wealthy clients that choose the highest we could possibly go. Let me self-insure. I'm not going to follow the plan unless my house is blown away.
Got it. So if you're looking at the $10,000, $20,000 claim, then that's their deductible is going to basically be eaten up anyway, so they won't actually follow it. But I love the point, and I don't think everybody realizes that they just call to see if maybe it's going to be covered. And I think even as realtors, we need to be careful about that, because I think sometimes when we're looking at, well, your roof is 15 years old, maybe call it that. Old days is really what was happening, as we say, call your insurance company, see if maybe you can get your roof replaced under the insurance, so then you don't have to pay for it. We can get a new roof. It's going to be easier. So I'm just going to be honest. I know that was happening. So that's not going to happen anymore. But we have to encourage people. I think there still is, because I I hear sellers say all the time, I'll just wait for the next storm and then I'll see if how can we do a better job of educating homeowners?
I think they're aware of it because wear and tear is not covered under the policy. There has to be evidence of hail. There has to be evidence of wind. There has to be evidence. But if there's just granular loss and there's not a named storm involved, there's not a hurricane or something, it's just wear and tear. You know,
I know, but let's call out the elephant in the room. The big driving factor of that were roofing companies. Unscrupulous roofing companies that were somehow, and you could see them canvass an area. Oh, we just had a storm, and they would go in and canvass every single neighbor. We just placed a neighbor's roof under insurance. Would you like us to try to get your roof replaced as well under insurance? And that has been a driving factor. And I'll tell you what I saw on the inside is that not only were they unscrupulous on that level, but then the roof actually might have cost $15,000, but the insurance appraiser had it at $30,000, and they would not even quote the price until they got the insurance companies. And then and I know it's against the law because I work with roofers who are more scrupulous and that wouldn't do that. Tell the homeowner, don't worry, I'm going to get your deductible covered in this.
very illegal.
Very illegal, but it was happening all the time. Has that stopped now?
Well, we haven't, fortunately, in the last couple of years had anything major. We continue to pray that we're safe here in Houston and that we don't need any storms or hurricanes or floods. But once that happens, we have people from all over the country that come in and we do not know them. And there are, unfortunately, scammers and restoration companies included. So we have to be very, very careful. That basically, no, I had a card maybe 6 months ago on my door saying, oh, call me. I just replaced, and I know they didn't replace the roof of my neighbor, but your roof needs to be replaced, and then they gave me a card, it's just handwritten. Yeah, just silly things. Yeah, very unprofessional. You need to find recommendations of moral and ethical roofing companies that are going to do a quality job. If you get a quality roof placed on your home, you can get another 20 to 30% off if it is a class 3 or class 4 shingle. And the roofing company provides documentation. They fill out our form and they sign it that they have used a class 3 shingle, the name of the shingle, the manufacturer of the shingle, the year that it was made.
See, I'm in the industry. I didn't know that.
Yes.
So I think that's something that we need to promote. So that would be another reason why homeowners would replace the roofs. But in all fairness, no one replaces roofs until you have to. When I see water coming into my house, then I'm going to think, oh, it's time to replace the roof. But until that roof leaks, most homeowners are not going to replace the roof. So put that in perspective for me because I have to see the numbers. 20 to 30%. Let's say an average, let's say a home price at $750,000, 77077. Since that's where we both live, or 77077, 77079. We know those homes are older, right? Most of those homes are going to be homes built from the 70s up to 2000. Some new construction over there, but very little. So you're a $750,000 home. What would that premium be?
Depending on the individual. However,
let's just say state credit, everything checks
$6,000.
$6,000 a year. So that 20 to 30%
is based on class 3 or class 4. Okay. That could be 10, 20, or 30. Like the other day, I got a check back. I just had my roof replaced. It was leaking. I knew insurance. It was leaking. I replaced it. I went with a class 4 and I got a $500 check back.
Okay. So but if it's 20 to 30%, so that was based on premiums that you had already paid.
Yes.
So 20, 30% on a $6,000 annual policy should be $1,200.
It could be $1,200.
$1,200.
That's a substantial savings.
Multiple. So, and the roof costs $15,000, $20,000?
A little more.
Okay.
I went with everything quality, top notch. I don't want to deal with it again in the next 40 years.
But yeah, so 40 years. So, and when I'm talking to roofers, I don't hear class 4, class 3.
Oh.
They talk 30 or 40 year shingles. So it's
a 40-year shingle, but specify to them, is this a class 3? And I need the manufacturer's name, and I need specifics on the shingle itself to make sure that this customer is going to get this discount. Now, all insurance companies have a roofing listing, whether they give that or not. The shingle, they could possibly not qualify based on the shingle that they're trying to sell, may not be the caliber it should be, right? So verify.
So great tip that I didn't even know, and we talk all the time, is that if you are going to replace the roof, maybe send the estimate over to your insurance broker, and you'll have a different confirm whether or not you'll get the discount.
Get the form from your insurance company. The form needs to be filled out and documented and signed by the roofer who installed it with the specifics. Get it back to your insurance company. Send it in. Let's see what we can do.
Great tip. You need to get a copy of that form.
Okay.
Because I think that's great information. Yes, viewers out there.
And with the roof, if you've replaced it after January 1st, you could use that now.
I'm waiting till January.
Okay. Yeah. So because you mentioned you're valued as of January 1st of the tax year. So in May, when you're protesting, you can argue if my house would have sold, it had a leak, it needed
Great idea.
get multiple bids and say my roof would have cost $30,000 and we would have to negotiate this if I sold my house January 1st.
Yeah.
So now they'll need to take this in.
So how much would that have helped get the value down?
And again, that comes back to appraisers. Some appraisers might take a full quote. Some appraisers might argue and say, I know it's 30, but we would negotiate. That's only going to take off 15% of value.
Insider information that only someone who does this for a living, a professional like yourself, a property tax consultant, would know to even do that.
Yeah.
So is there a questionnaire that comes out for homeowners to say, I know like when you're getting insurance, right there, you're trying to find out as much information about the property. So it's the same thing.
Yeah, same thing with our company. We would ask, what are things that have been replaced, fixed, or need to be fixed, and we would dig into all that stuff.
Great. So for you, some other tips, if you're trying to get we know you're going to have you want to keep that value down. What are some other things that homeowners can maybe keep track of to give information to help get that value down instead of what I get every year? Tell me what every other house sold for. By the way, when it was a seller's market, I would tell my clients, I can pull the comps for you, but they aren't going to help you get your values down.
Yeah.
So, because your house is priced less than what homes are selling for right now. So at that time, it does not help you. In this current market, especially if you bought your house 2021, 2022, probably paid that 25% above what the market was, I can probably assure you that comps are going to help you get your values down. So other tips that are valuable, like
other than comps, it's like getting bids. Like we'll have a lot of homeowners say, my fence is falling down, or look at the cracks in my house. But then you're leaving it up to the appraiser to decide what they think the value would be. And so if you get an actual bid with tangible number that you can show either the appraiser or the appraisal review board, now you're giving them money that they can actually deduct from the value instead of guessing. So I think getting bids for issues that need to be fixed, that would be really important.
Okay. Exterior, cracked driveways.
Yeah. All that stuff, as long as you have bids and can document it. Anything that if you were to sell a house that you think this would cause my value to drop, I would document all of that stuff and then bring it to the year.
Got it. Those are great tips. So as we're going along, controlling the cost of home ownership, you both have shared some amazing tips that I've been in this business for 20 some years and I didn't know. So I learn something new all the time, which is why we go to the professionals to provide that information. Anything else that you want to share?
Just in closing, we collaborate. Our job is to do what's right for the customer, regardless whether it's with us or with someone else. It doesn't matter. It's education of the customer, education of the coverages, education of what they can do to mitigate losses and to keep their premiums as low as possible. Bundle the auto and home. Make sure the home is updated and you have pride of ownership. You take care of it. If there's a small claim, take care of it. Don't let the water sit there for weeks and then there's rot and mold and all of those other items. Pride of home ownership. Watch the credit. Make sure you pay your bills on time because there are credit characteristics that are always involved. And remember, another very important item is flood insurance is not covered under homeowner. Rising water, that's through the National Flood Insurance Program. And it's something totally separate. But we're big believers in flood insurance. It's not if, it's when. Our weather's very unpredictable. And so always encourage that. It is very expensive at some point. Just call us. We'll do a flood zone determination to see if that's something you're interested in. It's always an option, but we're always here to educate, to collaborate, and to make sure that we secure those premiums and to get them as low as possible for the homeowner.
Great. Thank you so much. Yeah. And I would say, use your insurance agent as a resource. Maybe check in if you see that those costs are going up. Give them a call and say, I noticed that it went up. What are some things that I can do? And I can assure you that Joy and her team will guide you on some other things that you can look at to try to lower that. So that means too, which we learned today, if you update something at your house, change out your plumbing, maybe add a bigger security system. I had someone add those crazy storm shutters at their house. Those are all things that when you make those updates, contact your insurance agent, make them aware because they won't know either. They don't have a camera in your house, thank goodness, where they're watching what you do all the time. They might have a little drone flying over, but that's going to help you get that insurance cost lowered. So reach out to them and we'll make sure that you have Joy's contact information. Right. How do you want to close this?
Yeah, I think the number one thing if you're a homeowner is the homestead exemptions. That's the one thing that you can control.
And people miss it.
And people miss it. So it's either when you buy a new home, you either fill out the form and it got denied and you just missed that you got denied and didn't know. Or maybe there's a name change with the county. And when a name change happens, it automatically takes the homestead off. So you might have gone 2 years and not known. And that homestead's going to save you somewhere between 18 to 22% on your final tax bill.
Yeah.
And so that's significant and you can control that. And so there's companies out there now, though, that are charging and saying, hey, we'll file it for you. And then they take a percentage. So you're going to owe them $2,000 on something that takes 2 minutes to fill out. And so I would just suggest do the homestead yourself.
Yeah.
It's going to save you 20% on your taxes. It just
Once it's done, you don't have to do it again.
You don't have to do it again.
As long as
Unless you refinance.
There's a name change. Or
if there's a name change or you refinance, because that happened to me once. Actually, I'm going to tell you this little story. I had O'Connor Associates years ago, and because I believe in just having a company protest my taxes so I just don't miss a beat. And I had refinanced one of my rental properties, and no, I'm sorry, that one wasn't my rental property because I wouldn't be able to homestead it. Refinance, and they removed the homestead exemption, and they didn't catch it. So, the first thing I looked at is why did my value increase more than 10%? Because it's not homestead. I said, isn't that the first question you would ask?
No boy.
So I fired them. I was like, okay, well, obviously you're not doing your job if you don't even look at that. They said that we don't do homestead exemptions. Well, saying if you're watching my property values, for me, that would have been one of the first indicators. Is that
for sure?
Why did the value go up more than 10%?
Yeah, for sure.
So I think that's important. If you refinance it, as long as I didn't think about that when I refinanced it, they removed the homestead exemption.
Yeah, wow.
So, but anyway, sorry, I didn't mean to interrupt there, but yeah.
Well, thanks so much for having us.
We want to make sure that all of our followers get your contact information because we believe in being there throughout the homeownership journey for our clients, and you're a big resource for us.
Well, thank you.
So thank you so much.
Absolutely. Our pleasure.